What a nasty close to the trading day for markets and for Tesla stock. Tesla closed down over 2% today. And here in this video, I will explain why I actually think markets look pretty good right now, heading into bigger catalysts this week. Now, we do have some catalysts tomorrow morning, specifically, I will also talk about. But the big news today was Microsoft is canceling hundreds of megawatts of data center capacity. This news hit different areas of markets differently at different times of the day today. But what it did hit particularly hard was data centers, clearly, but also big tech. Nvidia was down 3% today. Google down 1/3 of 1%, AMD down 2.5%, Amazon down 2%, Meta down 2.26%, and other AI names like Vertiv. They provide cooling solutions for data centers. Down 5% today. So there is more AI fears. Now, again, right before Nvidia earnings. Let me tell you what you're going to get out of Nvidia. Minus anything like super dramatic, you're going to get a beat and raise. I know, it's crazy, right? Nvidia is going to beat and raise. That just sounds like information we should already know at this point. Okay, the question for Nvidia earnings is going to be about Blackwell chips. And I don't think we have a problem there. Okay, all of your big tech companies have come out and reaffirmed that they are raising AI CapEx guidance for this year. Now, what about next year? Who knows? Too early to say, and I don't think we're going to get any guidance from Nvidia on that. But here's really the deal. Microsoft was overpaying for this data center leasing. So, I mean, Microsoft didn't even necessarily confirm this, but it's safe to say that they're probably canceling some of their data center contracts. But they were overpaying. And they were just getting charged a ridiculous rate because they were willing to pay any price. Does that destroy the AI theme? No. In fact, I think, ironically, it should boost the appliers of AI. I think logically, if we are seeing less data center, power needed, right? Less computing power that's needed via some of these DeepSeek headlines that we've seen recently. That's part of today as well. That, again, back to DeepSeek, that maybe now you don't need as much computing power to run AI in the future. I think that's actually great news for Tesla. That should set Tesla apart because Tesla is not a big data center company. Tesla is applying real world AI. And I do think, especially in the second half of this year, it's all going to be about what is built on top of large language models and what's actually applicable AI. Okay, that's what's going to be important to markets in the second half of this year. And that makes me very optimistic for Tesla in the second half of this year. And that's a core thesis of why I have a $900 price target on Tesla stock by the end of this year. But I see today as really just another injection of fear that is really unfounded, okay? That really doesn't make a whole lot of sense, logically speaking. We actually had good news for Tesla today. The FSD is entering the Chinese market. If anything, that's more adoption of AI globally. Did that help Tesla? No. In fact, look at pre-market. When this news came out that Tesla was launching FSD in China, Tesla went from $330 per share to $346 per share. An impressive move higher. I mean, this was a rally of about 5%. What happened? As soon as you opened for trading, Tesla stock sold off from $346 down to $324 per share. That was a 6.5% sell-off, essentially for no reason. Investors just said, yep, we don't even care about that. That doesn't even matter. And in fact, FSD is a 90% net margin business, as we think it is, or as we currently kind of know it to be. 80, 90%, doesn't matter, not really. It's massively accretive to Tesla's profitability. Wall Street didn't care. And I think it's the overall fear that we have in the AI sector of our markets right now. And I think that actually sets us up very well heading into Nvidia earnings, because we are not overly optimistic. We're not, at a place where we're just pricing in incredible things for Nvidia and AI. There's a lot of fear out there. And that's a little different compared to Nvidia's other earnings, where expectations were super high. So if we get the status quo from Nvidia, these AI stocks are likely going to rip higher again. And I think there's no reason to expect we're not going to get the same old status quo that we have seen before from Nvidia. Now, if we take a look at other ways of looking at investor sentiment, I think it's pretty clear. Wall Street is overly bearish right now, when in all reality, not a whole lot has changed, okay? The CNN Fear and Greed Index today is at 30. You're almost in extreme fear. Heading into these big catalysts this week, that as a contrarian indicator is actually very bullish, right? That is actually something that we should look at and say, what are the odds of a continued, fall in markets when people are this bearish? And, the odds are good that you do see a reversal. Now, obviously, not guaranteed, but the odds are in your favor that the bulls can actually win out here. Now, option activity yet again for Tesla stock coming in good today. 283 different trades totaling $202 million with a positive order value of 63%. Not super, super bullish, but not bad also. Look at that. Again, 410,000 shares are being covered in Tesla stock day after day after day. Hedge funds and institutions, they're covering on their short positions, continuing to. This should tell you something. Now, we should get a new short interest figure reported to us this week. I'm not sure exactly what day. It might be tomorrow. In fact, let's see, February 11th. Yeah, it should be tomorrow that we get a new short interest. And to me, it looks like that's going to plummet yet again. And we're already currently sitting at the smallest short position from hedge funds and institutions. This is like the most bearish or bullish they have ever been on Tesla stock. And I do think with this week's catalysts that are coming, I think there's reason to be bullish, at least in the short term. Now, where do these things go longer term? Obviously, that's anyone's guessing game. But I think a lot of this market just wants some clarity from Nvidia, what their demand is looking like. And I don't see any reason at this point to question that. Now, again, worth keeping in mind that right now is the worst seasonal period for markets. So we see markets kind of go through this, even though we know like the second half of February is a, seasonally really bad time for stocks. We're all always shocked when markets, follow those seasonals. And that's what's happening. It's not super surprising. Now, today in after hours, you had earnings from Hims and Hers, Riot, Tempest, Cliffs, Zoom. Majority of these stocks did trade lower. Not a big shocker. A lot of them are momentum names. Coming tomorrow morning, you will get the Home Depot. Okay. Obviously, that's very important for the overall state of the economy. If Home Depot has rough guidance or a warning to give us, then that's something markets are going to pay attention to. And Home Depot is one of those companies that really could influence the markets a lot, like Lowe's, Wednesday pre-market, as well as obviously Nvidia in after hours on Wednesday. You will have Kava, AMC, Axon for solar, Lucid, Instacart, Lemonade, Workday, Zeta, Intuit, and others tomorrow in after hours. Thursday, you will have Norwegian Cruise Lines, Vistra Energy, TD Bank in pre-market. And then in after hours, SoundHound, Dell, Archer, Rocket Lab, Clover, Duolingo, Transmedics, and Opendoor. And then Friday pre-market, you will have Fubo. So big focus on the retailers, Home Depot and Lowe's, as well as other, more premium food companies like Kava. I think that's going to be important as well in judging how the consumer is doing. And then clearly Nvidia is setting up to be a massive catalyst. And usually, when we see this kind of selling with AI stocks and with Nvidia heading into Nvidia earnings, it usually sets us up for a good post-earnings reaction. Again, it doesn't always have to, but a lot of the time it does. Now, a big story as well in the last really 2 days. Friday, you were down big on Friday. You were down big today. S&P closed down almost 0.5%. The big story is really the consumer is weakening. And this morning's economic data suggests that that's happening. Chicago Fed National Activity Index came in well below estimates, expecting an actual month-over-month improvement. No, you plummeted. You were expecting 0.21. You came in at negative 0.03, right? So you actually came in negative. Not great. Dallas Fed Manufacturing Index was expected to rise from 14.1 to 18. You came in at negative 8.3. Not good. Okay, consumer or economy definitely weakening. Now, at 4:20 a.m. tomorrow morning, you are going to get a speech from Fed Logan. So some Fed comments, could hit the algos. We'll definitely want to pay attention to that. Since, again, the last 2 days, consumers look like they're weakening. What does the Fed say about that? Does the Fed turn a little bit more bullish? Do they stop with all the hawkishness? Something we'll have to wait and see. S&P Case-Shiller home price year over year comes out tomorrow morning. House price index month over month and year over year, as well as the CB consumer confidence that comes out at 10 o'clock in the morning tomorrow. You also get regional Fed data, Richmond Fed manufacturing index, shipments index, and services revenues. Dallas Fed services index and Dallas Fed services revenues will be coming out tomorrow morning as well. Fed Bar speaks at 11:45. Fed Barkin speaks at 1 p.m. And then you do have a 5-year bond auction tomorrow. So that is the data that we have tomorrow. You do have huge data as well, really throughout this week. Wednesday is going to be the slowest day. 7-year bond auction, multiple Fed speakers, new home sales. But that's pretty much it. On Thursday, you get durable goods orders, again, important for judging how the economy is doing. Your second estimate for GDP for Q4, you're expecting that's going to fall from 3.1 down to 2.3. So expecting a big move lower with your GDP report for Q4 that comes out on Thursday. A bunch of Fed speakers and secondary data points as well on Thursday. And then Friday, you have PCE, expecting that's going to actually move higher on a month over month basis. Personal income month over month expected to fall a bit, and personal spending really expecting to plummet. Okay, so tomorrow specifically, I think is interesting because we've had 2 bad days in a row. And again, this data is going to be important. Okay. And we're paying a lot more attention to these smaller data points than we have in the past. There's, so much to be bullish on. As Warren Buffett once said, a stock price is the price you're buying a stock for. The value is what you get. And it just seems like almost every day we have really good news for Tesla and there is no positive reaction. And now considering the stock, which again is the biggest AI stock out there, it is the biggest real world applier of AI that we know of, is down 32% from all-time highs following the news that FSD is entering China within the coming days. I like the risk reward here, right? I like the fact the stock's down 32% and there is an opportunity to position more into the stock before we get the holy grail of AI catalyst, which is Nvidia. Nvidia is going to reassure that things are fine with AI, and obviously if they don't, that's going to be a big problem, clearly. But I'm not expecting some kind of disaster. As Fundstrat's Tom Lee shares this post from Dan Ives, Dan Ives says, "We expect another robust performance and clear beat and raise special this week from Nvidia that should calm the nerves of investors as the godfather of AI, Jensen, lays out the massive demand drivers from Blackwell and AI capex fueling this fourth industrial revolution." Strat's Tom Lee shares this and tags Nvidia with an arrow higher. Well, the only difference is from this post being written, Nvidia is down 3%. The price has changed. Has the value changed? Has the information gotten worse? Not really. Microsoft just doesn't want to overpay for additional GPU, compute. That makes a lot of prudent sense. They probably shouldn't have been overcharging, Microsoft if they wanted to keep them as a client. There's a lot we don't know about that situation. Microsoft, kind of came out and rebuked that a little bit. Did not seem to matter. AI still got hit hard today. But really, bottom line is you're seeing some very bullish value, creation over at Tesla. It's not being appreciated in Tesla stock. And we have big catalysts this week in which you're already super bearish. So, do we compound that bearishness and get even more bearish? That's kind of hard to believe as the stock is down 30%. Right? 32%. Because you have to compound this fear. Once the fear kind of stops, the negative news stops, you do tend to see rallies. And again, there's no reason to forecast Nvidia is going to have bad earnings. For anyone that's tried to do that for years now, you've been wrong every time. The bigger question really is when it comes down to Nvidia, is it priced in or is it not? And I think Nvidia is going to be a relatively small mover this earnings season. I'm not expecting a 20% upside move, but I think it will reinforce confidence that AI is here to stay. Like people, one day they're super bullish on AI, the next day it's a bubble, right? That's kind of the mentality, and Tesla's just on the losing side of it. It doesn't matter what news Tesla shares with us, breakthroughs, it just doesn't matter these days for Tesla. I think it does matter, and I think Wall Street will start to view Tesla in a much more positive light, but we may have to get through Nvidia earnings first. And then the question is, how do we balance that with the economy weakening? Yes, Doge, cutting back on government spending. That's not great for the economy because basically the government's just giving out free money. There's no accountability. It's like grants. The government's just been giving out billions and billions and billions of dollars of grants virtually every day. To start cutting that off is negative for the economy. That's a fact. It is taking some stimulus away, which, partly explains what's happened to markets and probably some of your AI stocks. But also, shipping out 37,000 immigrants in the last month and cutting 240,000 government workers will have a negative impact to the economy. Again, question is, does the Fed respond to that? Do they start to get more, bullish, essentially, dovish? Or does the Fed just continue to, let the economy weaken and continue to be hawkish? Do the odds of a recession rise? Because corrections, they come and go. Corrections come because of growth scares. We are definitely in a growth scare right now, or at least the start of a growth scare. Do we start to kind of expect things to get worse? That would be a bigger problem for broader markets. And honestly, today just looked really rough for a lot of stocks. And I am optimistic things get better throughout this week. Again, look at what big money is doing in Tesla. They are massively covering on short positions. Hello. Are we not paying attention? Is this too hard to grasp? Big money is the most bullish on Tesla they have ever been before. Doesn't mean you should copy them. Doesn't mean you should necessarily put all your chips on that. But it's a damn good sign of, what could be to come soon for Tesla stock. And in my opinion, that would be a move higher. So that is going to do it for this video. Let me know your thoughts on this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.